we're diving into something huge today, a real seismic shift that's happening right now. It's the moment Wall Street's old guard finally starts speaking the language of blockchain. We're talking about the tokenization of pretty much everything, and it's starting with the very stocks we all trade every day.
So let me just start with this question. What if a regular, everyday stock listed on the Nasdaq could be bought, sold, and moved around just like Bitcoin or Ether? I mean, really think about that. This isn't just some hypothetical question anymore. It's the future that some of the biggest exchanges and some really bold companies are building as we speak.
Now, I know the term tokenized stock might sound a little intimidating, maybe a bit techy, but honestly, the core idea is way simpler than you think. So let's break down what it really means to put a traditional stock onto a blockchain.
At its heart, a tokenized security is really just a new and frankly better way of doing bookkeeping. You know, we went from paper stock certificates to digital entries in some bank's database, while tokenization is just the next logical step. It's about representing your ownership as a unique digital token on a blockchain. Think of it as a brand new high-tech wrapper for the exact same valuable thing.
And what's so important to get is what doesn't change here. The value is identical. Your rights as a shareholder are identical. Whether you own a traditional share or a tokenized one, you own the exact same piece of the company. The only real difference is the tech it's built on. And that opens the door to a whole new world of applications in decentralized finance, or DeFi.
And look, don't just take my word for it. This quote from Nasdaq's own Senior Vice President, Chuck Mack, just hits the nail on the head. This isn't about creating some weird new version of a stock. It's about making sure the token is a perfect, legally binding mirror of the original share. That's the bedrock of trust that makes this whole thing work.
Okay, so how does a technology like this go from a cool idea to completely mainstream? Well, it happens when the giants get involved. And they don't get much bigger than Nasdaq. The world's second largest stock exchange has actually filed a formal proposal with the SEC. That is a massive stamp of approval right there.
So you might be asking, why is Nasdaq doing this? Well, it's a mix of seeing an opportunity and protecting their turf. They see the growing demand and the potential for massive efficiencies. We're talking way faster settlements. But they also want to make sure this future gets built the right way, inside the existing rules, protecting investors, and avoiding a total mess of a fractured market.
And check out how smart their plan is. For you, the investor, almost nothing changes. You go to place an order, same as always. But now you get a new option when it's time to settle, tokenized form. You just click that, and the existing, super trusted system, specifically the DTC, handles everything else. It settles your share as a token on a blockchain. It's a seamless upgrade, not some crazy overhaul.
And to be clear, this isn't just some idea on a whiteboard. They have a concrete plan, a real timeline. After they file with the SEC in September 2025, they're actually targeting the third quarter of 2026 for a potential launch. This is the institutional groundwork for the future being laid, brick by brick.
But here's where it gets really interesting. While Nasdaq is carefully laying the tracks for 2026, some people aren't waiting around. And that brings us to SharpLink, a company listed on Nasdaq that is basically building this future right now.
And SharpLink isn't just some random company either. They're a performance marketing firm that made this incredibly bold pivot to build a massive corporate treasury of Ether. In fact, they're one of the largest public holders of ETH on the planet. They have such deep conviction in this space, and now they're putting their own stock where their mouth is.
This quote from their co-CEO, Joseph Chalom, just says it all. For them, this isn't just a cool tech project. It's a statement, a declaration. They are actively showing the world the future they believe in by tokenizing their own common stock, SBET, directly on Ethereum. They're not waiting for permission from the old guard, they're grabbing the future with both hands.
But here's the real game changer. SharpLink's ultimate goal isn't just to have a tokenized stock. It's to have that stock actually trading on DeFi platforms. They want to plug their equity straight into things called automated market makers, or AMMs, which are basically decentralized exchanges that run on pure code 24/7 with no middlemen. This is the bridge. This is Wall Street plugging directly into an open financial system.
So when you put these two stories together, you've got Nasdaq's methodical, institutional plan on one side and SharpLink's bold, pioneering action on the other. You start to see the future of trading taking shape. This is not a drill. This isn't some fringe experiment anymore. It's the next evolution of capital markets.
So let's just boil it all down. What are the key takeaways here? First, institutional legitimacy has arrived.
giants like Nasdaq are building the regulated highways. Second, you have pioneers like SharpLink who are already on the road, proving this can be done today. And finally, and this is the big one, these two forces are rapidly, finally closing the gap between the walled garden of traditional finance and the open world of DeFi.
And all of this leaves us with one last massive question to chew on. If a publicly traded stock, one of the most heavily regulated assets in the entire world, can live and trade on a blockchain, then what can't? I mean, think about it. Real estate, private equity, fine art, your mortgage. We might just be looking at the very beginning of a future where every single form of value becomes a programmable, globally accessible token.